Hi, William. Welcome to Finance Fridays.
Morning, Stephanie.
I really enjoy Finance Fridays with you. We have been doing it for a long time, and I think it's about time that we start telling people what we're doing on Finance Fridays.
Absolutely.
Can you tell everyone that's looking what is Finance Friday?
So Finance Friday is something that was born a couple of years ago during the pandemic. I was sending emails to my brother explaining to him what I was investing in, like crypto, and why were the stock prices going up 5% every week, and all this sort of stuff. And I would just break down the market like, well, what is Elon Musk doing? Why is Tesla going up or down? What's happening with SpaceX and Bitcoin? So it started from just these emails of my brother and I exchanging information about the world of finance, money, and what we could be doing about it. And then you and I got into it over the past year, same sort of thing, where it's like, well, Stephanie, let me tell you, this is what's happening. You got to get into this. And This is what's happening. Now, of course, I'm not a financial advisor, and I'm not a CPA or anything like that. I'm just a guy who's got a pot of gold, and I'm just sharing how I make my pot of gold grow a little bit bigger, right? Finance Friday is just that. It's just us talking about money, how to make it, grow it, whatever.
Love it. And I can't wait for us to dive into it. So one of the things that we talk about a lot in our meetings is intergenerational wealth.
Yes.
What is intergenerational wealth?
Intergenerational wealth is the root of what I call also tequity. We tell people you need an equity share of technology. It's like, well, why? Well, the difference between intergenerational wealth and just cash on hand is you get paid a paycheck typically, and you buy food and you pay a mortgage and all this sort of stuff. And when you stop working, that paycheck stops and you have nothing to pass along to your family, right? Intergenerational wealth is I have something to pass along, whether it's real estate, stocks, it's various things that I can now say, I've worked hard, family, here's what I'm going to pass along to you so that you can build upon that rather than starting from scratch like I did, right? So intergenerational is between generations, right? You're passing something along.
Cool. I love it. And that's the name of the game. That's what we've been trying to do, especially my generation. We want to have intergenerational wealth for our kids. So as we got into a lot of our Finance Fridays, one of the questions I asked you before was what are asset classes?
Yeah, so asset classes is, if you've never heard the term before, it's just a way of saying there are different kinds of things that have value. I'm trying not to say money or wealth, things that have value, okay? And a thing that has value is anything that someone will pay you for, right?
Okay.
If I picked up a shell off the beach and someone says, I'll pay you $100 for that, that thing has value, right? Now, if I do that and I have the only shells on the planet and everybody wants them, that's a whole asset class. I'm going to be wealthy because everyone has to come and get my shells. All right. So asset classes, and there's lots, but there's a few that are key. So I'll just go through them fast. Cash on hand. So we all understand dollars, although we use debit cards these days, so you don't see cash as much. But cash is one. Gold is an asset class in and of itself. And you understand people around the world collect gold and it's of value and people will pay you for it, right? Real estate is an asset class because if you have a house, it typically goes up in value and you can sell it later because it's a desirable thing and people will pay you for it. Stocks in a company is typically an asset. Bonds, which is something where you're essentially loaning money to typically a government entity, is an asset class. Now that's to distinguish between things that are debts or debit classes, right? A car is not an asset. A car is something that costs you to buy it. It depreciates as soon as you get it off the lot. You keep paying for it because you're paying gas, insurance, wear and tear, maintenance. And if you ever sell it, it's worth less than you bought it for. A credit card is not an asset. It's a debt. It just represents the fact that you could owe somebody $5,000, if you charged up your credit card. So assets distinguish themselves from, debts by saying an asset is something that typically appreciates in value. It goes up in value over time. Debts are things that don't. They take money out of your pocket. They don't put money into your pocket. So those are what asset classes are.
You mentioned these asset classes, but I noticed you didn't mention crypto.
Crypto, yes. So crypto is an extra special one because it came along back in the day as an alternative to money and gold and transactions and all such of things. So crypto, we're going to talk about crypto in its own session because that's quite a thing. That's not just a single asset.
Yeah, I have a lot of questions about crypto.
Yeah, we'll get into that.
So for Finance Fridays, let me ask you, because not everybody has, let's just say, money just floating around, sitting around under the money tree. Suppose I only have $100 to start with, just $100 a month. Tell me, how can I start?
So the key thing about now, I want to start here by mentioning the size of my own pot, because I think that talks about my own credibility. So I looked at my net worth, and this includes everything, houses, cash, stock, gold, whatever, is about $4 million.
Oh, wow.
So I'm no Bill Gates, but I'm not living on the streets. So what I've learned is what's super important is not actually the dollar amount. What's important is the percentage of increase. So whether I make 1%, 2%, 10% on my overall pot of gold, or you make the same on your $100, well, 10% of 100 is $10, right? $10 is $10. Now, that's $10 you didn't have before. So you don't have to think it's only $10. It's like, well, if you didn't make that $10, you didn't make that $10,
right?
Right? And depending on where you are financially, if you only have $100 to spend, $10 is significant. $10 is lunch or whatever it is that you buy with $100. It's 10%.
Right.
So what's important to note, and when we get to planning, we'll talk about this more, is you're concerned about the percentages. You're not concerned about the absolute amounts, because no matter what, 10% is 10%, and it's money you didn't have before. And if you plan like that and it's a mindset shift, because if you say $10 isn't worth my time, well, $10 10 times is $100.
$100, right.
So, if you just save $10 more for 10 months, you've now doubled your money.
Double.
You do that enough times, and we'll talk about exponential growth. You do that enough times, suddenly your $100 turns into $1,000. So it's just important that it doesn't matter how much money we're talking about. We're going to talk about percentages more than absolute dollar amounts.
Okay, cool. So William, I am ready. I want to get started. Tell me how to get started.
All right. So we're just started with some vocabulary, some rough stuff, some, asset classes and whatnot. Next time around, I want to actually get into one particular asset, which is the stock market. In order to do that, anyone who's listening should go off and investigate getting a Fidelity account, so fidelity.com, or a Schwab account. These are the places where you go to actually buy stocks and bonds and index funds, all these sorts of things that we're going to talk about next time. So what's going to be required for you to set up those accounts is your Social Security number and maybe $100 deposit or something like that.
I could do that.
At the very least, just go in and look at these sites, Schwab and Fidelity. There are a number of other sites, Ameritrade, Robinhood. There's lots of different places you can go to trade in stocks. I'm going to focus on these two because I'm more familiar with them. So that's the homework, is go and become familiar with Fidelity or Schwab. And then next time we're going to talk about what we're going to do with that.
Awesome. I can't wait. So next, part 2, Finance Fridays, we're going to find out how we can invest our $100.
That's right.